There's a fantasy you've definitely seen. You point an AI at the stock market, the smartest machine ever built, and it just prints money while you sleep. It's on your feed right now. A bot, a subscription, a chart that only goes up. AI that beats the market. So in 2026, somebody finally ran the experiment for real. 8 of the most advanced AI models on Earth. 4 separate contests. Real money on the line. Not a backtest, not a demo. And here's what came back. Across all of it, 32 runs, only 6 finished in the green. The whole pool of money lost about a third of its value. That's the paradox. The same AI that's rewriting medicine and code and weather forecasting keeps losing at the one job everyone most wants it for. Same prompt, same market. One model barely traded, another fired off over 1,000 orders. That's not insight, that's noise. And who am I to referee this? I build forecasting models for a living. The exact thing people try to sell you in a $50 subscription. So here's the honest answer. The nuanced one nobody selling you a bot will ever give you. Does AI actually beat the stock market? The real answer isn't yes, and it isn't no. It's which AI doing which job. Once you can see that difference, you can never be sold the lie again. And to get there, we start with the headline that kicked all this off. The one where AI supposedly crushed the funds. Because that one is real. You've seen the headline, AI crushed the funds. And here's the uncomfortable part. It's real. So let me show you the strongest version of it, and then take it apart. A UK finance site asked ChatGPT to pick a basket of stocks. Then they just left it alone and tracked it. As of this spring, reportedly up about 58%. The average of Britain's 10 most popular funds over the same stretch, about 36.5. So on paper, the AI list beat them by roughly 21 points. And it's led for almost its entire life. That is catnip. That is the screenshot that sells the bot. So let me put my forecasting hat back on and tell you what's actually going on. Because the people who ran it already told you. 1. It's a single list of 38 stocks. One window. There's no statistical significance here. It's a sample size of 1. 2. That window, early 2023 to now, was one of the great bull runs in AI megacaps. A monkey with a dartboard had a pretty good few years. 3. The AI list treats every stock equally. The funds it beat don't. So a big chunk of that gap probably isn't clever stock picking at all. It's just a different way of counting. And 4. This is the one nobody mentions. ChatGPT-picked once, 3 years ago. Nothing's been repicked since. That's not AI investing. That's buy and hold on autopilot. And here's the kicker. The site that ran it says so itself in writing. Quote, "It's a conceptual experiment, and you should not try to get stock tips from AI." When the people showing you the win are begging you not to copy it, believe them. And remember that, because it's the rule for this whole series. Every headline AI win you'll ever see is a raw return in a bull window, dressed up as a strategy. So, if it mostly loses, why do the biggest, smartest firms on the planet pour billions into AI? Here's the secret. They're not asking it to predict the future. They're asking it to do a completely different job. And at that job, it's astonishing. Job 1 is execution. Not what to buy, how to buy it. Picture a high-speed trading firm. Over about 1,200 trading days, its automated systems had exactly one losing day. 1. Now let me be precise, because precision is the whole point of this channel. That's one snapshot from a single filing, one window before costs. It doesn't mean they never lose money. It means that at execution, at the plumbing, automation is real, and it is brutally good. Job 2. Same idea, bigger bank. JP Morgan built an AI for trading, and its own description is the cleanest line in this entire story. It has no say in what gets bought or sold, only how. Reportedly, it cut the cost of moving a giant order by around 15%. See the pattern? the wins are all plumbing. Speed, slippage, risk, the boring, mechanical, beautiful parts of the machine. And the prediction part isn't zero, it's just tiny. The best academic research we have finds that even the smartest machine learning methods squeeze out only a faint edge. And here's the trick the whole industry hides. At an institution with scale and leverage, a faint edge is a fortune. For you, on a retail app, after fees and spreads, that same edge rounds to nothing. Fortune for them, nothing for you. That one gap is half this entire video. And here's the kicker. The model that genuinely works isn't an AI at all. It's people and machines, together. Thousands of human-built models blended into one. One big asset manager reportedly committed up to $500 million to a fund like that. Humans in the loop. So write this down. AI is a phenomenal execution and research engine. It is not a crystal ball. Keep those two things apart, and you'll never be fooled again. Okay, execution, solved. Plumbing, solved. Now the question you actually came here for. Can an AI, left alone, predict what a stock does next and trade it for you? Here's where I stop being diplomatic. Go back to that real money contest. Most of the frontier models didn't just lose, they lost big. And they couldn't even agree with each other. Same prompt, same market. One model made fewer than 200 trades. Another made over 1,400. That's not insight. That's noise wearing a confident face. Then an independent run, a different venue. Researchers at Arcata Labs with Harvard gave frontier AI models real money to trade live for almost 2 months. Every single one lost money. The one winner you'll see quoted around the internet, that was a 3-day paper run. Not real money, not real. And now the most damning one, because it comes from a believer. A professor proved ChatGPT could read the news and predict the next day's move. A real signal. And then he showed you the catch himself. To actually capture that edge, you'd have to buy and sell almost your entire portfolio twice over, every single day. Add real trading costs, and the whole thing turns unprofitable. His words, not mine. Trading is a zero-sum game. It's all about execution. Then there's the spookiest finding of all. A 2026 study showed that a chunk of an AI's apparent forecasting skill, in one task, roughly a third of it, wasn't skill at all. It was memory. The model had quietly seen the future in its training data, and the instant you test it past its cutoff, that edge collapses to essentially zero. It didn't predict, it remembered, and then forgot how, the moment it faced a genuinely new day. So step all the way back. One index of AI hedge funds, over about 14 years, returned around 9.8% a year. The S&P? About 13.7%. Now, I have to flag this hard. That number's 2 years stale, and a hedge fund index isn't a clean match for a stock index, so don't overread it. But the direction is the same as everything else. As a group, these AI funds did not beat just buying the market. So why? Why does the smartest technology in history keep face-planting on this one problem? This is the part I actually do for a living. So let me give you the 4 reasons in plain English. Once you have these, you can smell the scam from across the room. Reason 1. An AI learns the patterns of the past. But the market never promises tomorrow looks like yesterday. A model trained on a calm decade is studying for a test whose questions get rewritten the morning of the exam. A crash, a pandemic, a new policy. That's a question it has never seen. The rules keep changing, and the machine is always fighting the last war. Reason 2, and this is my favorite, because it's the one that sells every single bot. Overfitting. Flip a coin 10 times for 1,000 people, and someone gets 10 heads in a row. Put that person on a stage, and they look like a genius. A backtest is that stage. Try enough strategies on the past, and one of them will look brilliant by pure luck. Set the bar where it actually belongs, and most published trading edges turn out to be probably false. Ghosts in the data, not real money. So when a bot shows you a gorgeous backtest, that isn't evidence it works. That's evidence somebody kept trying until it looked like it did. Reason 3. Say an AI does find a real edge. The moment that edge gets written down, in a paper, a blog, a $30 bot, it stops being a secret. And a secret everyone knows is worth nothing. It's like a shortcut to work that your map app discovers. The day it shows everyone, it's just another traffic jam. And this is measured. Across nearly 100 known market edges, the returns shrank by about a quarter on fresh data, and more than half once they were published and the crowd piled in. Which is the final irony. The instant a bot is popular enough to be sold to you, it's already too crowded to work. And reason 4, the deepest one. An AI is the best grad student who's never once run an experiment. The greatest pattern matcher ever built, but only inside the world it's already seen. It doesn't truly understand cause. Researchers literally call them causal parrots. They recite cause and effect they pulled from correlations without understanding it. It's the rooster who thinks his crow makes the sun rise. Perfect correlation, zero causation. And here's why that's fatal for trading. Markets break exactly at the moments that have never happened before. That's precisely where pattern matching collapses, and you need real causal judgment. The kind the machine just doesn't have. 4 reasons. The rules change. The backtest lies. The edge crowds out. And the machine can't reason about a future it's never seen. None of that means AI is useless in markets. It means it isn't a money printer. And anything sold as one is just selling you the gap between those two ideas. So, does AI beat the stock market? Here's the honest answer, the whole answer. Where AI does a defined job, executing trades, managing risk, reading 10,000 filings before lunch, working beside a human who keeps judgment on the table, it's not just good, it's already winning. The market maker with one losing day in over 1,000. The bank that taught a machine how to move an order, not what to buy. The crowd of thousands of human-built models blended into one. That's AI in markets, working. And where it's sold as a crystal ball that prints money while you sleep, it loses. Not because AI is weak, because that problem is the hardest one there is. And the moment a real edge exists, the market eats it. So write this down. AI in markets is a brilliant teammate. It is not a money printer. And almost everyone trying to sell you that money printer is selling you a lie. Let me leave you with the one skill that protects you, the test the regulators themselves spell out. When a pitch promises guaranteed returns, when it swears its secret AI system can't lose, when there's no risk, only upside, that isn't a strategy. That's the single clearest fraud signal there is. Real edges are small, fragile, and humble. Confidence is the tell. And watch the soft versions too. A free robo-advisor that quietly wasn't. A company that just slapped AI on an old product to look smart. Regulators have a name for it now. AI washing. And they're writing settlement checks for it. None of this is anti-AI. I built these models. I'm in awe of what they do. The point was never fear, it's clarity. Know which job you're asking the machine to do, because the technology was never the question. Whether we treat it as a tool, keep human judgment on the regimes no data has ever seen, and refuse the guaranteed pitch, that's the choice. And it's still ours to make.